Hello everyone, welcome to another video of Market Matters with me, Dr. Diffins. In this video, we're going to talk about an option that you have for stock market investing. I've made videos before on investing in the stock market, and one of the things that I failed to mention in those videos is that you definitely want to become comfortable with the stock market in general before you actually put your money in the stock market. And again, as I mentioned before, I know that the word stock market or just the idea of investing can be a turnoff for some people, but there's a tool here that Investopedia offers, and it's a stock market simulator. And that can be found at investopedia.com. I noticed it in one of the last videos, and if I put it right here up to simulator, and the purpose of the simulator is that you will be able to go ahead and do some demo or kind of shadow trading. So this would be your opportunity to trade and invest in the stock market without actually putting your money at risk. Just to give you an idea, I've been involved in the stock market for over 10 years. And even with that level of experience, I can tell you that, the index fund investing would have been probably the easier way to just go ahead and put the money in an index fund and let the index fund do the work for you. But of course, over the years, you get involved or you get interested in actually maybe actively trading yourself. So when you do that, typically, like I stated in another video, you're taking that single stock risk. So you definitely want to put some time on a simulator before you actually kind of go live trading. So what I'm going to go ahead and do is go ahead and register for the simulator and let's see what happens. So I will be right back. Just going to go ahead and create an account. Okay, so I went ahead and registered for an account, and I now see this is the main screen. When you go to register, you actually have to confirm or verify your email address, and then you will be active. So I'm just going to take a minute here and look through this, kind of take you step by step. Let's see, are you interested in any of the following on the simulator? I could look at company news, copy trading, maybe, I don't know what, this company watch lists, crypto training, reading investing law. Yeah, why not? Just pick a few that you might be interested in. All right, so this says, oh, you've been given $100,000. All right. Oh, it's virtual cash. Okay, so it's not actual money, but all right, so $100,000. And we're going to monitor your performance and manage your holdings in real time. Okay, this sounds exciting. And then we have diversify your portfolio by trading from a variety of stocks, ETFs, and options. Okay. And then look up real-time company data. And then games, use the leaderboard to compete. All right, so maybe eventually we get into the games, but for now, that's okay. Just trying to learn the ropes here. Okay, so just looking at this dashboard, and this looks very similar to what you'll see in an actual portfolio. So it looks like we have $100,000, the account value. Okay, and they say it's updated nightly, average return. This is for the year, for the annual return. Today's change. If you click on these little information buttons here, you can see the different amounts here, or you can see the different information. Okay, there's a current rank, and then there's your stocks and ETFs, options, shorts, and time to market opens, and then actual brokerages that you can use. Wow, this is actually a pretty decent platform here. It looks very similar to an actual one. And then your chart performance will show up here after we start making trades. All right, so I'm going to go ahead and Just gonna click on the Learn tab. Okay, here we go. So where it says, let's see, Introduction to Stocks. Let's click this. What is the stock market? Okay, nice. So Investopedia, it's just what it sounds like. It's like an encyclopedia for investors. So this is actually perfect. This is where you can find real detailed information on the stock market. And then here's some when to sell a stock. Okay. And I see some key things. Emotion and human psychology can sometimes get in the way of making a smart decision. So it looks like they're going to be providing some pretty sound information here. Okay. And then you have income, value, and growth stocks. Oh, this is interesting. Figure out this type of stock that you're interested in. If you're in those growth stocks, like the technology stocks, biotech, they give some examples. Okay. And then a value stock. All right. And then income stocks. Include like dividend stocks there. Okay, so again, a lot of information. And then here we go, managing a portfolio. Here's what is an ETF. Had a video about this, but this is going to give you that detailed information. ETF is a basket of securities that trades on an exchange just like a stock does. All right, this is amazing. Okay, so you can spend probably a couple hours here and really just learn about the stock market. Here's information about options, option strategies. And just as a warning, you're going to see a lot of things especially once you start looking at, if you YouTube the word stock market, you're going to see a ton of videos of people saying how they made $1 million from 30,000 and how they make $2,500 a day. And I'm just going to say, be wary of those videos because just like anything else online, right? You can say one thing, but to actually do, actually achieve those sometimes can be near impossible. Or the worst thing that you can do is you can have a beginner streak. And that's actually worse. In my opinion, it's worse to start off making money in the market because then it makes you feel like you're invincible, right? And that's typically where people get cocky and then they start making mistakes, right? So they experience a little bit of success, and then next thing you know, they want to mortgage their home to put in the stock market. And then that's when something happens and something, maybe it collapses, or you have just an event that takes the market lower. And then all of a sudden they are struggling to survive and they're distressed. If you don't believe me, just Google it. Just Google the stories of stock market where people have put their retirements or everything into a stock or two, and then they've kind of lived to regret it. So I'd say you want to start off slow, become comfortable with it, give it a few years, and then, get some experience under your belt. Here I clicked on the research tab, same kind of a thing. They're giving you some technical ratings here. And that's based on charts and whatnot, is how they get their technical rating. Again, I wouldn't follow these blindly because I see companies here that they're saying technically are a sell, which may not be a buy this minute right now, but at the same time, these are solid companies. So it's to do your own research. And again, buy the stocks that you're comfortable with. And with that, it's like, okay, what are the stocks that you're interested in, but also are pretty large companies that you don't see failing or collapsing anytime soon? If you start seeing, say, like a penny stock or a company you've never heard of, that's probably not a stock that you want to invest in. Even in the demo, you probably don't want to invest in it because these are stocks that are just either being pumped for quick gains or you have no knowledge of. And why would you put your money into something that you know nothing about? It doesn't seem very responsible. Okay. So what I'm going to go ahead and do here on this $100,000 portfolio is I'm going to go to the trade tab. Okay. And then I'm going to go ahead and look up a stock to buy. And I'm going to actually be putting out a video because I'm going to create 2 real accounts. So in the coming days, I'm going to create 2 real accounts, and I'm going to fund them both with $1,000 each, And one of the accounts is going to be a ETF account, and the other one's going to be an individual stock account, just for comparison purposes. And my plan is to keep them for a year, and then we can compare the performance. So here, remember I talked about SPY, at least in another video. This is the Spider ETF, and it tracks the S&P 500. Okay. And with $100,000 account here, I'm going to go ahead and put in some orders to buy. I mean, it really is that simple, but actually it's not that simple. There's a huge step that I skipped. And that step is actually you creating your plan of what you want your stock allocations to look like. In other words, if you wanted to be fully aligned to the stock market, then you would just buy either SPY or QQQ or Dow Jones Industrial, just an index that tracks that. However, if you wanted to engage in single stock picking, then that would be another consideration. And what I mean by allocation is you're going to want to, let me see if I can find an article that'll quickly show me what I mean here. This one is exactly what we're looking for. And it kind of serves a purpose. If you see here, it talks about, this is somebody's portfolio, and they named it growth portfolio. And you see here that their allocations in this particular one is they want 36% to be in the Vanguard S&P 500. Then they participated with 12% in the extended market ETF. Then here they have a total international stock. I'm assuming it's an ETF or mutual fund here. And then here they have emerging markets that consist of 12%. And then here they have some type of a bond. And the reason that it's important to have your allocations, because if you're going to start investing, you're probably going to add, you're going to add money into your account in the future eventually, probably on a periodic basis. And you want to make sure that your portfolio stays balanced. So if you are thinking about being an aggressive growth investor, then that's where you would probably want to have, if you're index fund trading, then you'd probably want to have a large percentage of that in the QQQ, right? In the NASDAQ 100, where they're invested in the technology growth stocks. If you're thinking about making a more conservative portfolio, then you might invest in something like the S&P 500. And then again, you always have that opportunity to mix things up, right? So what I'm going to do here, just for purposes of this, is I'm going to just do a balanced portfolio of, let's say, 40% of it into the SPY, 40% into the NASDAQ, and then maybe 10% into that block, kind of Bitcoin blockchain ETF, right? And because this is a set account, I mean, it has a market or account value of 100,000, I'm not going to invest my money all at once. And that's something I would encourage you to think about is if you have a long time horizon, it's okay to start with a small amount and then build into it, because the market, as you can see here, is very volatile. And over time, that's the key. It's to constantly stay invested over time, right? Even through the bad times, because you're buying incrementally, so that way you can experience overall increase over time. So for this one, I'm going to go ahead and do a buy. This is about $400. And I'm going to say that I'm just going to do a nibble on it. So I'm going to buy just 10, which would be equivalent to 4,000. I'm going to use a limit order. In a limit order, the order types, let's click on it here. Okay, they don't really give a description. You'd have to click more. If you do a market order, that means that it will fill your order at whatever price the market is set to. Which can be dangerous, right? Because if something spikes up huge, you may not want to pay that amount. So I'm going to put a limit order. If the price on the closing date was $389, then I'll put a order for $342. $392. And again, that's just saying that's the most that I want to pay for the duration. I'm only going to do it. It's the day only, which means that it will happen on the next trading day. It's the weekend, so whenever it opens up, the order would be put in. I could also put a good till cancel. So if I was set and I said, oh, I want to only pay $375, well, then I can just put in an order for $375. I'm going to go ahead and preview the order. This is showing that I'm going to buy the SPY, quantity of 10 times 932 or 392 is 39.20 here, 0 commission. I'm going to submit my order. Okay, it says the order was received. Then I'm going to come here and I'm going to do the same thing for the QQQ. And I just want QQQ. Let's see, can I get just, let's try this again. QQQ. Here we go, this one. The Invesco QQQ. And the same thing I want to do $4,000. I think that'll be roughly 15. Might be a little bit more, so I'm going to go ahead with, let's say, 13 shares of it. And then I'm going to do, again, a limit order. And this one is 288, and I'm just going to say I want to pay 292 is the max. If it opens down, let's say to 286, then that's what it'll fill me at. So this is just saying the max price that you want to pay. Preview the order. Okay, so this one's 37.96, and maybe I say, you know what, I want to do another one. So I just go back, add a share, bam, now I'm at $4,088. I'm going to submit my order, and there you have it. Go to my portfolio. Okay. And then here it shows, oh, here we go. Down at trade history, it shows our pending trades. Okay. And then it shows here if I wanted to cancel the transaction before market opens. Okay. All right. And again, this is your mock when you have 100,000. Go ahead and, create an account here and just demo it. That way, if this account just absolutely gets slaughtered, then guess what? You didn't lose a penny, and you hardly even spent much time, because as you can see, in less than, I don't know, maybe 10, 15 minutes, I'm up and running and buying stock. And then you have it. And then we can track the performance over time. Okay. And then, like I said, I'll be putting out a video where I will actually be investing through a TD Ameritrade account. I'm just going to start them with $1,000 each. And I'm going to gradually add money to them. And then we'll just see how it does over the course of the year. And one of the things, the last thing I'll say about this investing in general, is that consistency is the key. Consistency is the key. And I just had a random, I'll close with this, just had a random Google thing that I saw today, one of their Google Doodles. And it was about this person, the Great Gama, and he was a wrestler. And I never heard about him before, but he's apparently undefeated. And I'd have to do more research. But what I saw was interesting here, and this was just a quick click. It says, how strong is this person? And it says, great show of strength came in 1902 when he lifted a 1,200 kilogram stone. Stone's now kept in a museum. And this was the piece that I thought was interesting. It says, if some points are to be believed, or reports are to be believed, Gama's training at one point consisted of as many as 5,000 squats and 3,000 push-ups per day. And the reason that this, whether it's true or not, the reason that this kind of caught my attention is because, just like with anything else, it's going to be time and consistency that's going to have you to be successful or not successful. Again, if you're interested in dabbling in stocks, that's going to be you consistently. This man did not wake up one day and start doing 5,000 squats and 3,000 push-ups. I'm sure it was an incremental plan over several years that had him come close to or achieve these, these numbers, these goals here. And it's the same thing with investing. If it's something you're interested in, don't see it as something where you're going to double your money in a year. That's not only is not unreasonable. Can it be done? Yes. However, if you're at that level, seeking that level of growth, then pretty much you need to know that you can lose it all at the same time period, because that would be high reward but high risk at the same time. But if you're willing to say, you know what, I'm going to come in here and use the simulator for a little bit, demo for 6 months to a year, and then actually put my money to work for the next 10 years, you can be exceptionally successful if you're willing to put that time in and stay consistent. Okay, I know that was a lot of information. As always, I appreciate your time. And this is Dr. Diffins signing off. Bye-bye.